All right, I wanted to do chapter 2 homework, some of the problems, just so you could kind of see how it all worked out. So the first part is we want to do list some accounts. So let's just put them in order. I want you to separate them by tens. And the liabilities. And the equity. And we do a numbering system like this because when you have a trial balance, it's so much easier to put it into financial statements when you have this ordering system. And that way, you know which ones go where. It just makes your life a lot easier in the long run. Okay. So I just put the numbers on there. Now, the first one we're going to do from most liquid to least liquid. So the easiest to turn into cash to the most difficult to turn into cash. So cash is obviously the most, it's already cash. Typically, the next one that happens is accounts receivable. We don't have an accounts receivable here. So let's take a look at what else we have for our assets. We have automotive supplies. So we'll go ahead and put that one. And what other? Do we have any other assets? It looks like that's a liability. That's an expense. We already did that. Equity, and equipment. So these are our assets. These are the ones where if you had to liquidate tomorrow, you could go ahead and turn these into cash. They're also the ones that you purchased to help you earn revenue. So let's go ahead and do your liabilities, the ones that are you owe. So accounts payable is probably the first one you're going to pay. Let's see what else we have. So unearned revenue is cash that is given to you and you have not yet done the work for it. So if they canceled or you canceled, you'd have to give that money back because you haven't earned it yet. So that's why it's a liability. Let's see if we have any others. Doesn't look like it. So now let's do our equity. So we're going to have common stock and we're going to have retained earnings. And let's take a look at our revenue. So for revenue, we're going to have service revenue. Let's see if we have any other revenue here. It doesn't look like it. So let's do our expenses. And the expenses, it doesn't really matter what order you do it. I've seen it done alphabetically. I've seen it done just kind of first come, first serve. So advertising expense. And that's it. So the other one I'm going to put up here is dividends. This doesn't really go on the balance sheet, but there's not a statement of owner's equity for it to go on. So this is going to go ahead and give you, let me make sure that I've got all of our accounts here. So 3, 4, 5, 6, 7, 8, 9, 10, 11. And how many do we have? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yep. So this is how this one should go. And hopefully you can follow along and this would help you out if you didn't quite get it. So let's go to the next one. I guess it doesn't matter. All right, so let's take a look at number 2. So number 2 wants us to make a journal entry for each of these transactions. So the business received cash of $86,000. So let's mark cash. And to increase cash, we're going to go ahead and put it on the debit side in return for common stock. So common stock is equity. To increase equity, 86,000. So that should help you with that one. And I guess you needed to put an explanation in here. So if we had to pick an explanation, let's see. We issued common stock in exchange for cash. Okay, so for the next one, we purchased office supplies on account. So our office supplies went up $760. It's an asset, so I'm going to debit. On account just means we haven't paid for it yet. So that's going to be an accounts payable. $760. Now for our explanation, we purchased supplies on account. All right, so number 3, we paid $55,000 in cash for building and land. The building had a fair market value of $44,000. So the reason that we need to separate this out is because we depreciate buildings and we don't depreciate land, and we'll talk about depreciation later. So what we need to do, what I would do is go ahead is, you have your building and you have your land and that you paid with cash. So your cash for sure decreased by $55,000, right? And your building had a fair market value of $44,000. So let's go ahead and put that there. Asset, we're going to increase it with a debit. Well, to make this journal entry balance, that you have to have $55,000 on each side. So what I would do is I would just take $55,000 and subtract $44,000, and you're left with $11,000. And $11,000 has got to go here for land. And then for your explanation, you paid cash for land and building. All right, so performed services for customers and received cash. So we know that we received cash of $3,700. Why did we receive cash? Because we did our job. And when we do our job, that is considered revenue. So I'm going to increase my revenue by $3,700. And my explanation is that we receive cash for doing our job, otherwise known as performed services and received cash. All right, so paid $660 on accounts payable. So we know we have accounts payable and we paid it with cash. So our accounts payable went down $660. We don't owe it anymore. Our cash went down $660 because we paid it with cash. And I'm going to say paid on account. Perform services for customers on account. So that means that we have not received the cash yet. If we haven't received the cash yet, it's an accounts receivable, $3,500. It's an asset. I'm going to debit. And why are we going to receive that? We're going to receive that because we did our job, which is revenue. And so I'm going to say perform services on account. Paid rent for the month. So my rent expense, my cash. So my cash went down $1,200 because I paid with cash. And then I have rent expense, and rent lowers equity. So to lower equity, I debit. You always debit an expense. Or you could say I need to put something on the debit side. So paid cash for an expense. Received $2,000 from customers for service to be performed the next month. So I know I received cash, and I'm receiving cash, but I haven't done the work yet. So that's considered unearned revenue. So it's $2,000, $2,000. And I'm going to say collected cash for future services. So this unearned revenue is a liability. Paid $1,100 for advertising for next month's IT Technology magazine. Well, that is advertising, and I paid cash for it. So my cash went down $1,100. Prepaid advertising is actually an asset because if we canceled tomorrow, we could still get our money back. All right. Paid for advertising in advance. Okay. All right, received $3,300 in cash on account from a customer. So I know my cash went up $3,300, and my accounts receivable is going to be going down because they don't owe that to me anymore. So I need to get rid of that. And I'm going to say received cash on account. right, last one, incurred and paid salaries. So I know that my salary expense and cash. So my salary expense, remember you always debit an expense, and then my cash went down. And we did it because we paid for our salaries. Let's see. So that's going to be paid cash for expenses. Okay.